Hi, a very good evening to all of y'all. Today we'll be looking at a small standard and which is a quite easy standard, which is known as IAS 20 government grants, right? So before we jump on into our topics, let me tell y'all this weightage of this topic would be maximum for a 2 mark question, right? In your section A or section B, right? And if examiner feels that is important, he would be testing y'all. It depends on the examiner's mindset. He will be testing y'all in your uh, section C as well. Okay. So before we move on into the standard, let me tell you all how this IAS 20 government grants came into play. Right. So what happens is government of each and every country is there, right? Sometimes they give the businesses, your company, they give you all reliefs or some grants, aids, right? They will give you all some aids or relief if you meet some of their conditions. So this government is not going to give you anything at free. There is nothing at free of charge. You need to achieve their economic objectives, right? There's something called full employment, improvement of the standard of living, infrastructure facilities, and attract foreign investment. These are some of the economic objectives of a government, right? So if the business is able to fulfill all of this or any of these criteria, alternatively, or on the other side, the government will be giving them some reliefs or grant. That is simply known as government grants. Okay. So for your business, what do you think is an advantage for the business? Well, obviously, government, since they're giving you the grant, it would be treated as an income or it would be treated as a reduction in cost. So then for a business, they'll be having a large amount of income or a cost saving. Right. So this is how you treat a government grant. Okay. Now I've given you all the definition. I've given you all the definition. Don't worry at exams, they're not going to test you what does IAS 20 say, what does IFRS 5 say. No. Just remember it. That's more than enough. Right? So government grant is a relief provided by the government to the company if the company complies or adheres with government conditions. Right? This relief will be in the form of transfer of resources to the entity. Now, let me tell you how I told you, right? For the entity, there will be cost savings or income generated. This is how it's going to happen. For example, your company is beta, right? Your company is beta. What you do is you are planning on running your company in a region where there is higher rate of unemployment, right? You all are planning on establishing this particular company in a region where there is higher unemployment, right? So what is government's objective? What is government's objective? Some more eradicate or some more eliminate the unemployment level, right? So what your company Albita is doing, it is planning on giving jobs for 250 employees. Since they meet the economic objective of the government in region C, right? Government will give you a grant. Government will give you a relief. This is how it's done. This is how it's done, right? But see, now government will not just give you the grant, right? And the company will not just obtain the grant. You need to adhere. You need to comply with certain conditions, and these are the two conditions, right? These are the two conditions. If you if you fulfill these two conditions, the grant is for the company. If he does not, the government will ask you to repay the grant back, right? Which will be looking in the latter parts. Okay. See, company must provide reasonable assurance that all the conditions will be complied. So that means now government will be setting your some conditions. Say you need to have full employment, you need to reduce redundancy, you need to increase attract foreign investment. All of this, you as a company must 100% give them assurance. 100% assurance. You need to give them 100% assurance that you will be able to do, right? If you're not, if you're not 100% confirmed, you do not give a reasonable assurance at all, right? You do not give a reasonable assurance at all if you are not 100% confirmed that you cannot meet the conditions set by the government, right? This is condition number one. Condition number two, once conditions are fulfilled, who fulfills the condition? It's the company or the business that fulfills. Government will provide the grant. See, what did the government say? If you fulfill my conditions, I will be giving you grant. So you need to get it signed by the government saying that once we fulfill the conditions, government will give us the money or government will give us the tax concessions, right? So these two conditions are needed for you to obtain a grant. Number one condition is you as a company must provide a reasonable assurance on what? Saying that you will try to meet the conditions that are being set by the government. That is number one. Number two, if the company meets, if we as a company meets the conditions, we need to make sure that government will give or will stick to its word by giving us the grant. These are the two conditions that always have to be met. Two conditions. Okay. Now this is an important point. Okay. This is an important point. And another important part is what are the accounting concepts used? Now, this can be tested in your MCQ. Sometimes it may not, right? So in terms of IAS 20 government grants, there are two concepts that is being used. One is your accrual, one is your prudence. So let us look into that. Now you all know, right? Prudence concept says is never overstate assets, never understate liability, right? Show your financial statements as it is, right? So now let us relate this into IAS 20. Here, see. Now, if I'm 100% going to receive, if I'm 100% going to receive that income or an asset from the government, then only I need to show it under my statement of financial position. If not, do not show, right? So that means there is no overstatement or no understatement, right? If I'm 100% sure that I'm going to receive, then only I'll be going and mentioning it in my statement of financial position. So therefore, prudence concept is being met. We are not overstating the asset. We are not understating the asset. We are showing it only in our books if we are 100% sure. If that transaction is probable, only we'll be showing it under our asset or under our revenue. That is prudence concept. Accrual basis. Government will be giving a grant, right? That particular grant needs to be matched with the relevant expenditure incurred. Right now, accrual concept may be sounding different. Wait, I'll give you all an example. See, for an example, this is for this, okay, for accruals. You provide employment, right? You provide employment for 150 employees. Then you need to pay salary, right? Which is an expense, an admin expense. Say it's 100,000, right? You need to pay salary. Obviously, no employees are going to plan on working for your company for free, right? You need to pay them an amount. So that is an expense for the company, right? In case if you fulfill all the conditions and government give you grant, right? This grant will be recorded in this particular year. You are getting a grant. Say the grant is 125,000. This grant is to be recorded in the year when this salary was incurred, right? The salary was incurred, say, in 2005 year. Then this grant is also supposed to be recorded in year 2005. This is what we tell by the meaning of accruals, right? Hopefully, all are clear with that. So, what we look so far is we know government gives us grant. only if we meet the conditions, right? And both the conditions needs to be met, right? And there are two accounting concepts. One is prudence, one is accrual, that is being used in your IAS 20, right? Hopefully my screen is visible. I have given you all an illustration as well to explain it. Yeah, that's more than enough in terms of theory of IAS 20, right? Okay, moving on. Now see, sometimes governments, they give you all interest-free loans, right? These are habit for small scale businesses. So there are these small boutiques, right? Small boutiques, small shops. What government does is they don't have enough liquidity. The businesses don't have enough liquidity to run. So what government gives? Government gives them interest-free loans. Government gives them interest-free loans. Why? So if any sale is generated through that small and medium scale business, they will be able to pay back for the government taxes. So that is what and why government gives you all interest-free loans. In case if government gives you all interest-free notes, you all need to it is you all need to disclose under your notes. You all know, right? You all would have done your advanced levels, you all would have done your any other academic qualifications. In that, you all would have learned under company accounts. You all need to prepare statement of profit or loss, statement of financial position, and notes, financial notes, right? So, in case if government provides you all interest-free loans, you all need to show it under IAS 1, right? This is a rule. This is a rule. This is a rule, right? If they give you all interest-free loans, make sure that you all show this under IAS 1. Okay. Why are we going to show? Because getting an interest at a zero rate, sorry, getting a loan at a zero rate is going to benefit the company in a different level, right? That's a financial benefit. So shareholders need to know about this. You cannot avoid this. Shareholders need to know, right? Okay. Now, let us move into the best part of accounting, right? So I told you, right? Government gives you all grants. So grants can be in terms of revenue grants, and grants can be in terms of something called as capital grants, right? For now, our focus is on revenue grants, and later we'll move on to capital grants. Okay. I have given an example as well. So let's discuss revenue and then we'll move into capital. But if you ask me which grant would be tested in terms of examiner paper, I would say majority is your capital grants. But sometimes revenue grants also will be tested, right? So don't avoid, learn both, and they are nothing much. You do not need to memorize or nothing. Just learn both and go. Whatever is tested, be able to tackle it on that particular day. Okay. So revenue grants means, let's see. Revenue grants means sometimes government will give you money, right? Sometimes government will give you money, physical money, right? Or sometimes they'll deposit to your bank, right? So if they deposit to your bank, right, you can treat revenue grants. You can treat revenue grants. One, you can show it as an income, right? You can show it under as your income under your profit or loss, saying that grant income. Okay. Or what you can do is you can deduct it from the relevant expense. Let me tell you all slowly what and how it's going to happen. See, for an example, I'm again taking the same employment. I have provided for a water zone, sorry, yeah, for a water zone, I am providing employment opportunities, right? I'm providing employment opportunities. Now, government's objective is being met. Okay. So for my company, I need to pay 500,000 as salary for employees, which is an admin's expense, right? Government will give me a grant, right? Government will give me some cash. Say they're giving me 250,000. Say they give me 250,000. So the final expenses is 250,000. So this is how you deduct and show from the relevant expense. Employment expense was the expense that the business need to incur. From that, what I do is I just simply go and deduct the grant. This is another way of presenting it in your financial statements, right? And moving on to this one, the first one, moving on to this one. We can, I told you, right? We can show any grants that is being received by the government as your under your profit or loss under other income, right? Under other income, we can show. So the double entry would be is debit bank, you're getting the cash in, credit grant income, credit grant income, right? Sometimes there's a tendency that government will give you all the entire grant at once. Say for 5 years grant, they will give you at once, right? So they'll give you 5 year grant at once. But y'all as financial accountants, y'all as financial analysts, you all need to remember, right? We only use on accrual basis. We prepare financial statements on accrual basis. So anything that is received, anything that is received more than your current year, right? You need to transfer it to your income received in advance or deferred income account, which will fall under your non-current liability and current liability, right? Hopefully, I'll remember your basics. Hopefully, I'll remember your basics, right? Or sometimes government won't give you cash. Sometimes government will tell that they are planning on paying you the amount. So that means that is grant receivable, right? That means it is grants receivable. So debit grant receivable, credit P&L, right? So there are two situations. If they are asking you in terms of revenue grant, and you need to show it under income, other income in your profit or loss. The double entry is quite simple. Debit bank because you are receiving cash, credit grant income, and credit income received in advance. Why? Because sometimes the government will provide you grant which is for more than 5 years, 10 years. So we need to understand we prepare accounts only on accrual basis. So the current year will be going under grant income, credit the grant income, anything excess from current year. Excess from current year, right? Anything excess from current year will be shown under our income received in advance, which is our non-current liability or current liability. Okay. And there's another double entry. If the government does not pay you in cash, sometimes you need to receive it. Then what will show is debit grant receivable, right? Which would fall under your current asset and credit your grant income, right? This is all that you will do in terms of revenue grant. Simple as that. This is all that you will do in terms of revenue grant, right? So you could either show it under your other income, or you could, what you could do is go to your expense column, go to that relevant expense column. Say, for example, it was related to your marketing expenses, go to marketing, right? In your marketing expenses, say your marketing expenses was about 500,000. From that, you deduct the grant and you can show as that also, right? So there are two different methods. There are two different methods. You can choose whichever the method that you want, or examiner will specifically tell which method that you're supposed to use. Okay. So I'll tell another example also. Let me change the pen color. This is another example. Example. Marketing expense to attract foreign investment, right? So in my expense column, I would have had marketing expenses for say 175,000, right? Government now gives me a grant. Why? Because I'm bringing in foreign investment to the country. I'm bringing in foreign investment to the country. Government gives me a grant, right? Government grant for marketing. I'll be going simply from that expense column alone. I'll be simply going and deducting this. Say I'm receiving 200,000, or say, give me an example. Sometimes you won't get excess. Sometimes it might be partial grant. Say you're getting only 150,000. You're getting 150,000. So therefore, your final expense will be only 25,000. Can you all see here? Because of this grant, your expenses is falling down. So this is a benefit. This is a benefit. Okay. So this is how you do accounting for revenue grants in two different ways, right? In two different ways. Now, let us go and look into a question for us to understand even more further, right? An entity is given 300,000 on 1st January 2001, okay, to keep staff employed within a deprived area. Now, deprived area are with less infrastructure facilities, poor economic conditions, that kind of areas, right? So what would government try to do? They would try to make the business boom in that particular region, right? Now see the condition. This is the condition. This is the condition. The entity must not make redundancies. Redundancies means it should not fire off its employees. It should not fire off its employees for the next 3 years, or the grant will need to be repaid. Right? I told you all. If the business does not satisfy the conditions that they initially agreed upon, that entire grant will be taken by the government. Okay? By 31st 2001, no redundancies have taken place. So that means you are adhering, you are complying according to the IAS 20 government grant. So now how do you do the accounting method? How do you do accounting for this? Now this would fall under revenue grant. How would I say? How would I say this would fall under revenue grant? Is because government is giving you money, right? They are not giving you any capital items. If government gives you building, if government gives you land, if government gives you factory, all of those are capital grants, right? But in this particular case, government is giving only physical cash. So physical cash, right? So let's treat. Now 300,000 was received for 3 years, right? You need to apply your basic accounting. 300,000 is for 3 years. That means the grant per year will only be 100,000. You can only recognize 100,000 in your statement of financial position, in your statement of profit or loss. Okay, only 100,000 can be recorded. Why? Because we prepare accounts only for a year. We don't prepare accounts for 3 years. Accrual basis. Remember, accrual basis. Right now, I have prepared it in both ways. I have prepared it in both ways. So what I could do, my first way is I could show it under. Sorry, my bad. It's wrong. My bad. There was a typo. Show the 100K. Show this 100K. Show this 100K each year as other income. Right? Other income, you can show it under government grant income. Right? You can show it under your other income, under the narration of government grant income. Right? 100,000 you will be recording. What would be the double entry? We'll come into it later. Okay. Or we could show under method number 2. Here it is. Method number 2. Method number 2. What would be the method number 2? Let's again go and look into it. You deduct the grant from the relevant expenditure. Right? You deduct the grant from the relevant expenditure. Now this grant was related to expenses, right? This grant was related to expenses, right? What is the type of expense? It is employee salary. Redundancy is related to employee salary. So what I'll be going and doing is simple. What I'll be going and doing is deduct the 100K from the relevant expenditure. In this, you will be deducting, say, from employee salary, give me a minute, from an employee salary expense account, you will go and deduct 100,000, right? Employee salary expense account is a expense, right? So from that expense, you need to reduce your expense. You can reduce your expense. So simply I'll tell in simple terms, reduce the expense. Obviously, if you reduce expenses, your profit will rise. So that is also one of the revenue grants that can be given by the government. Okay. Now, what is a double entry and how do we present it in our statement of financial position? For both methods. Okay. For both methods. Now, don't think this is for method number one, this is for method number two. No. That's what I've given you a dotted line which separates this part from that. All right. This is your second requirement. This is your second requirement. Double entry would be debit bank, right? Because you're getting cash, you're not getting capital assets. So debit bank of 300,000 you're getting. 100,000 would fall under your current year as grant income, right? It will fall under your grant income. The remaining 200,000 is there, right? That will be showing under income received in advance. Why do we show it under income received in advance? See, that amount, we are not sure in the next 2 years we'll be able to meet it or not, right? Current year, yes, I met. So I recognize it in my profit or loss. For the next year, next 2 years, I'm not sure. There is full of uncertainty, right? So what I'll do, I'll go and put it under income received in advance. Now you all need to understand income received in advance is a non-current liability asset, so non-current liability account as well as a current liability. So you all need to bifurcate it and show. You all need to bifurcate it and show. Now you all can ask, how did you divide this balance 200,000 and showed it under 100,000 each? It's quite simple. 200,000. How many years are remaining? How many remaining years? Only 2 years, because out of 3 years that the grant was issued, 1 year was met. So only 2 years. So per year, 100,000. Right? So this 100,000 would fall under your non-current liability, and this 100,000 would fall under your current liability. Why current liability? Next year, in case if you meet within 12 months, if you meet, then obviously you need to show it under current liability. Don't go and always show the entire 200,000 under your non-current liability. Why? Because next year within 12 months, anything within 12 months falls under your current liability, right? Okay. Now, coming into the final part, how do I present it in my statement of profit or loss? For my current year here, see, let me change the pen. I know let me change the pen. Can you see here? Can you see here this? No. Oh, take another pen. Yeah, here it is. Can you see here? For current year, for your current year alone, you had 100,000 as your grant income. That will be going and shown under your profit or loss, right? In terms of balance sheet, coming into balance sheet, in terms of balance sheet, you will be receiving cash. You'll be receiving cash, which will be shown under your current asset, 300,000. Right? Give me a minute. You're receiving cash, you'll be showing it under your current asset, 300,000. Right? And you will be separately showing non-current liability and current liability of Y for the entire 200,000 figure. right? This is called presentation. This is called how you present it. This is called how you present it, right? Now you see your asset and your liability won't match. Why? Because your liability side is 200,000, your asset is 300,000. So where did the remaining 100,000 go? That will come under equity. That would fall under equity. That would fall under equity. Why? Because do you all remember here? See, there was an income generated to your profit or loss, right? That profit or loss will be shown under your equity. Current year profits. Simple as that. Simple as that. So what I want you all to do is just pause the video, watch it, understand it. If you all have any doubts, send me on WhatsApp. We could discuss. Okay. Okay.